You were scanning a price chart and suddenly one candle just pops out. It just screams conviction, you know. No tiny wicks, no hesitation, just pure, solid price action. Driven hard one way. It's really striking. So today we're doing a deep dive into exactly that pattern, the Marubozu candle. We've sifted through a whole stack of analysis and research you provided, really dug into its origins, the psychology behind it, how to spot it, and critically, what the data actually says about its effectiveness. When does it work? When doesn't it? Our goal here is simple. Distill what this pattern is, what it tells us about market forces, where it might be most useful, and based directly on these sources, how you could potentially use it, maybe just as important, how not to. So yeah, get ready to maybe see these bold candles in a slightly different light. Okay, let's kick off with that name, Marubozu. It sounds, well, distinctive. It means shaved head, right? Tell us about that.
It really is a perfect name, isn't it? Yeah, in Japanese, Marubozu. That's it. It literally means shaved head or bald head.
Bald head, okay.
And it's such a great visual metaphor. It describes a candle with a full, solid body, but it's completely bald, meaning no upper or lower wicks, those little lines, the shadows you usually see, gone.
Okay, the hair is missing.
Exactly, no hair. And interestingly, you see the same idea pop up elsewhere. Like in Vietnam, traders might call it Ninh Kung Luk,
Which means
strong candle, or sometimes Nun Trok, the bald candle.
so same idea. Strength, baldness.
Yeah, both names really hammer home that visual, the strength, the lack of hesitation, that connection, you know, the shaved head, clean, decisive, and the shape, the solid bar with no wicks. It's powerful, makes it really memorable once you get it.
That image definitely sticks with you. Okay, so beyond the look, the bald head, what's this bold, solid shape fundamentally signaling? What's its main job on a chart?
Well, its core purpose is to show you a trading session where one side, buyers or sellers, had just complete control, start to finish.
Total dominance.
Pretty much. No significant pushback, no real price rejection shown by wicks. It's like a visual measure of extreme momentum, decisiveness within that single period. The messages, hesitation, gone. One dominant force drove the price. Full stop.
Loud and clear.
And because it's so straightforward, it gets used everywhere. Stocks, Forex, crypto, commodities, you name it. And it's useful across different styles, too. Day traders confirming momentum, swing traders looking for trend strength, even longer-term analysis.
Right. So if you're looking at a chart, this pattern is basically yelling at you about who's in charge right now. And you mentioned psychology. What's really going on behind that solid block? What's the thinking?
Yeah, the psychology is fascinating. A Marubozu is basically a picture of an extreme supply-demand imbalance for that session. One side just completely steamrolled the other.
Right.
So take a bullish Marubozu, the green or white one. The psychology there is intense optimism, right? Confidence. Buyers are so sure the price is going higher, they're just buying that. Buying at any price during that session. They push it up from the low, where it opened relentlessly, closing right at the high. It's pure expectation of more upside.
Got it. Aggressive buying.
Exactly. Now, flip it. A bearish Marubozu, red or black, that's pessimism, maybe even panic. Sellers are dominating. They just want out, selling at any price. This constant pressure drives the price down from the high where it opened straight to the low. It signals strong fear, strong belief it'll keep dropping.
Total selling pressure.
Right. Now, here's the interesting bit, the information trade-off. This pattern gives a very strong signal about the net result, who won decisively. High signal there.
Wow.
But because there are no wicks, it gives you very little info about any struggles within the session, any indecision, any rejected prices. You don't see it. Low information on the internal battle.
Right. Unlike other candles.
Exactly. Contrast it with, say, a doji. That's all indecision, right? Tiny body, maybe long wicks. Or a hammer shows a big fight, but one side eventually won. Marubozu just shows the landslide victory, not the messy details of the fight.
That's a great way to put it. Decisive about the outcome, but hides the internal struggle. Okay, so we know the name, the look, the psychology. How do you actually spot one on a real chart? What are the specific visual cues?
Okay, let's start with the textbook definition. The perfect ideal. A perfect bullish Marubozu opens exactly at its low, closes exactly at its high. Perfect bearish opens at the high, closes at the low. Zero wicks.
Like a perfect rectangle.
Pretty much. But, and this is a big but, the reality, as the sources mentioned, is finding a perfect one. Extremely rare in real trading.
Okay, so perfection is unlikely. What's the practical approach?
Right. So practically speaking, analysts and trading systems, they accept candles with very short, insignificant wicks. Wicks that are tiny compared to the main body.
How tiny is tiny?
Yeah.
Is there a rule?
Yeah, there's a common quantifiable rule. Generally, the open to close distance needs to be at least, say, 95% of the total candle range, high to low.
95%. Okay, that's specific.
It gives you a clear threshold. And there's another layer. The body also needs to look relatively long compared to the nearby candles.
Why is that?
To make sure you're catching unusual decisiveness, not just a really quiet, low-range day that happens to have tiny wicks. You want to see that burst of conviction.
Right, it needs to stand out.
Exactly. And sometimes people classify them based on those tiny wicks, like full Marubozu, no wicks.
Right.
Opening Marubozu's tiny wick at the closing end, maybe slight profit taking. Closing Marubozu's tiny wick at the open, maybe initial hesitation quickly overcome.
Subtle differences.
Very subtle. But the core identity remains. Long body, minimal wicks, clear direction. Green-white for up, red-black for down.
Okay, so it's like setting criteria. Doesn't have to be perfect, but needs to meet these visual rules, like the 95% rule, and stand out a bit.
Precisely. And that process, identifying it, it lends itself really well to a systematic approach. You can almost flowchart it.
Oh, yeah. How would that work?
Well, you start with the candles data. Open, high, low, close. OHLC, first check. Body size is the absolute difference between open and close at least 95% of the high minus low. If no, stop. Not a Marubozu.
Filter one.
Filter one. If yes, check direction, close open. Bullish, close open, bearish. Simple.
Okay.
Then the crucial step, context analysis. This is where it gets its power or shows its weakness.
Honestly,
Like, what's the main trend on the daily or weekly chart? Is volume high on this candle? Where is it relative to known support or resistance levels? You only really consider the Marubozu signal potentially valid if the context backs it up. A bullish one in a clear uptrend, bouncing off support, high volume, that looks interesting.
But a bullish one crashing into major resistance in a downtrend.
Probably a signal to ignore or even view with suspicion. Context is king.
Got it.
And, this isn't just visual guesswork. The source even mentioned automating this, using programming libraries like TALib in Python.
really?
Yeah, there's literally a function called cdlmarubozu. You feed it the OHLC data. It spits out 100 if it sees a bullish one, 9 to 100 for bearish, 0 otherwise, based on its internal rules, likely similar to that 95% idea.
Wow, okay. So you can actually code that visual rule.
Fascinating. So what data inputs does that system need? Just OHLC. And are there other key ingredients or parameters that make the analysis better?
It's minimum, yeah. OHLC, open, high, low, close. That's the base.
But you need more.
Absolutely. Volume. Trading volume is, well, the sources strongly recommend it. It's almost essential for confirmation.
Why volume?
High volume tells you that the decisive move wasn't just like one big player pushing things around. It shows broad market participation, real conviction behind the move. Makes it much more reliable.
Okay, so OHLC plus volume, got it. What about parameters,
Right.
tunable settings? Right, parameters. These are the knobs you can tweak. First is the recognition parameter itself, like that min body percent, the 95%. You might need to adjust that percentage, maybe 90%, maybe 97%, depending on the market or the time frame you're analyzing. Back testing helps find what works. Higher percent. Fewer signals, maybe cleaner. Lower percent. More signals, more noise. It's a trade-off.
Makes sense. Optimized for this specific situation.
Exactly. Then you have strategy parameters, basically filters you apply after you've identified a Marubozu. First, the volume filter we just talked about. A common rule is only consider Marubozus that form on volume higher than, say, the 20-period average volume.
So above average volume.
Yep. The source had that great line. No volume, no jow, dudes, basically no volume, no trade. Confirms the momentum isn't just random noise.
Okay, what else?
Trend filter. Super important. Use a long-term moving average, maybe a 50-day or 200-day MA. The rule. Only look for bullish Marubozus if the price is above that long-term MA. Only look for bearish ones if the price is below it. Trade with the big flow. Don't fight the tide.
Simple, powerful filter.
And one more common one, an RSI filter. Using the relative strength index. A bullish Marubozu looks stronger if RSI is above 50, confirming momentum is positive. But, and this is crucial, be careful if RSI is already way up in the overbought zone, like above 70 or 80.
Why? Isn't strong momentum good?
It is, but extremely high RSI might mean the move is exhausted. That big Marubozu could be the final gasp, the blow off top, not the start of something new. Same logic for bearish Marubozu and oversold RSI below 30 or 20. Could be capitulation, ripe for a bounce.
Ah, okay. So RSI confirms momentum, but also warns about extremes.
Exactly. It adds nuance. So you see, it's not just spotting the shape.
Right. It's spotting the shape and then checking its buddies.
Mm.
Volume, trend via MAs, momentum via RSI.
Mhm.
And even those checks might need fine-tuning.
Precisely. And markets change, right? So tuning isn't a one-time thing. It needs ongoing attention.
Okay, this pattern looks so powerful, like undeniable control. But let's talk brass tacks. When we look at the numbers, the actual performance data from the research you shared, does it live up to that visual hype? What did the quantitative studies really say?
Yeah, this is where it gets really interesting and honestly quite surprising for a lot of people. That compelling visual, that feeling of strength, the data paints let's say, a more nuanced picture.
How so?
Well, one back test mentioned, from TrendSpider, I believe, found a pretty significant difference between the two types. The bearish Marubozu actually outperformed the bullish one. Significantly.
Get out, really?
Yeah. In their test, the bearish averaged about 0.8% profit per trade. The bullish, only 0.28%, which, after costs, is often considered basically unprofitable.
Wow, that is totally counterintuitive. Why would a big down candle be so much more effective than a big up candle?
The source suggests it comes back to market psychology, that old saying, fear is a stronger emotion than greed.
Ah,
Panic selling, or just decisive selling, it often happens faster, more violently than optimistic buying. So a strong signal of selling conviction, like a bearish Marubozu, might tap into a more powerful psychological driver, leading to better follow-through.
that makes a certain kind of sense. Fear drives faster action.
It seems plausible. And then there's the work of Thomas Bulkowski. His Encyclopedia of Candlestick Charts is like the Bible for this stuff. Deep quantitative analysis.
What did he find?
He found the Black Marubozu, the bearish one, ranked, number 4 actually, as a bearish continuation pattern, so confirming an existing downtrend. But here's the twist. He also found it could work surprisingly well as a bullish continuation signal.
Wait, the bearish candle worked as a bullish signal. How?
Yeah, averaging a 5.11% gain over the next 10 days, but, and this is the key, specifically when it appeared alongside an upward breakout in an existing bull market.
Whoa. Okay, so context completely flips its meaning there.
Absolutely. It just hammers home how critical that context analysis is. The pattern alone tells you very little about the future.
And how does Marubozu stack up against other patterns in his research?
Generally, patterns like engulfing or 3 white soldiers often rank higher in terms of reliability, especially for signaling reversals. Marubozu's strength seems more in continuation, and even then it's not top tier, according to some metrics.
Okay, and what about this idea of pattern decay?
Right, that's another crucial point from the sources. As patterns like Marubozu become widely known, taught in courses, programmed into trading bots, their effectiveness can actually decrease.
Because everyone starts trading them.
Exactly, or trading against them. The edge gets eroded. The source mentioned maybe a 10–15% drop in effectiveness for popular patterns by the late 2010s compared to earlier periods. They're not secret magic bullets anymore. Algorithms know them too.
So, summing up the performance. It's a powerful concept, has some data backing, especially the bearish side, but definitely not a guaranteed winner. Maybe less reliable than you'd think just looking at it, particularly the bullish one. And its historical edge might be fading.
That's a very good summary. Which leads perfectly into its strengths and weaknesses. Like any tool, right? Gotta know both.
Okay, lay them out for us. Pros and cons.
All right, strength. First, clear and easy to spot. Visually simple. Great for beginners learning charts. Second, shows strong momentum. It's an undeniable signal of decisive action in that session. Filters out all the noise and indecision you get with wicks. Third, versatile potential. It can confirm trends, signal breakouts, maybe even mark exhaustion points at extremes, though the data suggests that last one is maybe less reliable.
Okay.
And fourth, creates key price levels, the open and close of that candle. They often become reference points, potential support or resistance that other traders watch later.
Right. Psychological levels. Okay, those are solid strengths. What about the dark side, the weaknesses?
They are significant and often where people get tripped up. First, lacks context alone. We keep saying it, but it's crucial. On its own, it's blind. Tells you about one candle, nothing about the bigger picture. You have to add trend, support, resistance analysis.
Absolutely.
Second, prone to false signals in sideways markets. This is a major trap. In a choppy, range-bound market, a Marubozu looks like a powerful breakout, but there's no underlying trend fuel. Price hits the edge of the range and snaps right back. Lots of fake-outs.
Ouch. Yeah, I can see that.
Third, challenging risk-reward. Because the body is so long, your natural stop loss is often way down at the other end of the candle. That makes your risk per trade potentially huge compared to your likely gain, especially if you enter late near the close. Can lead to really poor RR ratios.
Yeah. The entry point feels late and the stop feels far away.
Exactly. Fourth, unreliable without volume. We covered this, but it's a weakness too. Low volume Marubozu, big red flag. Could just be noise, not real conviction.
Got it.
And finally, fifth, it's a lagging signal. It only confirms after the candle closes. It tells you definitively what did happen, not necessarily what will happen next.
Okay, so strong visual tells a story about that one moment, but totally needs backup from context, volume, and other tools. Easily fooled in the wrong environment and can set you up for bad risk management if you're not careful.
You nailed it. It's a piece of the puzzle, not the whole picture.
How does this pattern, this sort of raw, pure force candle, compare to some other classic patterns? You know, the ones that involve maybe two candles or show more hesitation. Where does Marubozu fit in the candlestick family?
Good question. Seeing it side by side helps clarify its role, so versus engulfing patterns. Key difference is structure. Marubozu is one candle showing dominance within the period, engulfing two candles where the second body completely covers the first.
Right, different setup.
And different signal, usually. Engulfing patterns are classic reversal signals. They show a dramatic power shift between periods, often seen as more reliable for spotting potential turns than a lone Marubozu.
Okay, reversal versus momentum.
Generally, yeah. Now, Marubozu is one powerful candle. 3 white soldiers is 3 consecutive strong bullish candles, each closing higher. Marubozu is one powerful candle. 3 white soldiers is 3 consecutive strong bullish candles, each closing higher. Marubozu instant conviction signal. 3 white soldiers sustained high conviction confirmation of a trend change or strong continuation over several periods. The sources rate 3 soldiers highly for bullish reversals.
So one moment versus a developing story.
Exactly. And finally, versus doji. These are polar opposites. Marubozu, max body, min wicks, pure decisiveness. Doji, tiny body, often with wicks. Pure indecision, a stalemate.
Total contrast.
Marubozu shows a clear winner for the session. Doji shows a draw, uncertainty. It signals a pause, maybe a potential change, but screams need confirmation, unlike the Marubozu statement.
That really clarifies it. Marubozu is that singular blast of certainty for one period, while others show interaction, struggle, or sustained shifts over time.
Precisely. And the sources often have comparison tables, which are super handy for traders to quickly reference these differences.
Okay, let's pull all these threads together then. The shape, the psychology, the data's twists, the strengths, the weaknesses. What are the practical, actionable recommendations? Based on all this research, how should someone actually try to use this pattern effectively?
Right. This is where we translate the analysis into potential application, drawing straight from what the sources suggest. Recommendation number 1. Context is absolutely king, non-negotiable. Always analyze the higher time frame trend first. Trading a bullish Marubozu on a 5-minute chart when the daily chart is in a nosedive, probably not wise. Go with the main flow.
Makes total sense. Don't swim upstream.
Recommendation 2. Confirm with volume. We've hit this hard, but it bears repeating. No volume, no trade. That Marubozu needs higher than average volume to be taken seriously. It validates the conviction.
Check the volume bar immediately. Got it.
Recommendation 3. Use other indicators as filters. Don't trade the pattern in isolation. Use moving averages. Not just for trend direction, but also dynamic support resistance. A Marubozu bouncing cleanly off a key MA. Much higher probability setup than one just floating in space.
Adds confluence.
Use RSI. Confirm momentum is aligned. RSI 50 for bullish. And critically, avoid those exhaustion traps. Don't blindly buy a bullish Marubozu if RSI is screaming overbought, say 70-80. Don't short a bearish one if RSI is deep oversold, 30-20. The move might be about to reverse.
Okay. Use RSI for confirmation and caution.
And consider other tools too, like maybe MACD crossovers as additional confirmation layers. Build a case.
Don't rely on just one thing.
Exactly. Recommendation 4. Consider waiting for confirmation, especially to filter out those nasty false breakouts in sideways markets. Wait for the next candle after the Marubozu to close. Does it close in the same direction?
Wait for follow-through.
Yes. A bullish Marubozu followed by another higher close adds a layer of safety. Shows buyers are still stepping up.
Smart reduces chasing fake moves.
Recommendation 5. Strict risk management is essential. Before you even think about clicking buy or sell, define your stop loss. Where will you get out if you're wrong? The typical spot is the opposite end of the Marubozu candle. Stop below the low for a buy. Yes, the stop might be wide because the candle is long. You either accept that risk, size your position accordingly, or you need to find more sophisticated entry techniques that might offer a tighter stop after the initial signal.
So plan your exit before your entry. Crucial. This is really where the value is, isn't it? Not just spotting the shape, but having this whole checklist.
Yeah.
Context, volume, indicators, confirmation, risk. Only then maybe taking the trade. It's a trigger. Needs serious backup.
That's the key takeaway for practical use, absolutely.
Okay, final question. Looking ahead, markets are changing fast. Algorithms, machine learning. Where does a classic, visually simple pattern like Marubozu fit into the future of technical analysis? Is it still relevant?
That's a fantastic question, and the sources definitely touch on this, looking at where research is heading. TA is always evolving, right? Marubozu, even though it's old, is still seen as a component, but its role is shifting.
How so?
Well, future directions include much more sophisticated quantitative backtesting. Imagine building detailed performance maps across thousands of assets, timeframes, volatility conditions, understanding exactly when and where this pattern historically had even a tiny statistical edge.
Going beyond simple averages.
Way beyond. And then there's machine learning. This is really exciting. Simple rules, like our 95% rule, might miss slightly imperfect Marubozos that a human eye might still recognize. AI models, like convolutional neural networks, could potentially learn to spot these good enough patterns from the chart image itself.
Wow. AI pattern recognition.
But even more powerful is using it in multi-factor models. Think random forests or similar techniques. The presence of a Marubozu becomes just one input feature alongside dozens or hundreds of others, the exact RSI level, MCD value, volume surge percentage, volatility, correlation, maybe even news sentiment.
Combining everything.
Exactly. These complex models then predict the probability of a price move based on all that combined information. The source mentioned research citing potentially very high accuracy, sometimes up to 99% in specific, narrow contexts using these ensemble approaches.
That's incredible.
So it shows the shift from looking for one standalone magic pattern to building systematic, probability-based trading systems. Marubozu isn't the whole signal, it's a valuable piece of data feeding into a much bigger, smarter decision engine.
It's like it goes from being the headline to being a crucial keyword in a much longer, more complex analysis run by algorithms.
That's a perfect analogy.
Okay, let's wrap up this deep dive. We've really unpacked the Marubozu, that unmistakable shaved head candle. We've seen it. It's a powerful visual of one-sided control. We understand the psychology of decisiveness behind it. And crucially, we've learned that while it's simple to spot, the data shows its actual effectiveness is, well, complicated. It depends heavily on context, needs confirmation from vital tools like volume and RSI, and demands careful risk management.
Yeah, and just to reiterate, the research shows it's definitely not a guaranteed winner. That surprising difference in performance, bearish, often stronger than bullish, gives us real food for thought about market psychology. And please remember, using it in isolation, especially in choppy, sideways markets, is probably asking for trouble.
Right. Context, context, context.
So maybe a final thought for everyone listening. As algorithms and machine learning get even more dominant in trading, constantly crunching data, finding patterns, how will the role of these classic visual patterns like Marubozu evolve? Will understanding them become less important for us humans? Or could it be that understanding that fundamental psychological message, especially when combined with modern analytical tools, actually becomes more valuable, helping us spot those high probability setups that maybe the average trader or even some simpler algos might miss?
That is a fascinating question for the future of trading, something to definitely chew on. Well, thank you for joining us for this deep dive into the Marubozu candle. We really hope this was useful. We encourage you when you're looking at your charts to look for this pattern, but always remember that checklist. Check the context, check the volume, check the indicators, manage your risk. Don't trade the pattern alone.